I think there's two components to this. One is the statement, there's a limited supply of gold. We don't know that. Again, a narrative-driven world. We're told that gold is scarce, but if I ask somebody, well, how much gold is there right now in the circulating supply? Again, we don't know for a fact, right? There's good guesses, right? So I don't want to kind of take the extreme view of like nobody knows. We have an educated guess, but we don't know with 100% certainty compared to, like, let's say, a Bitcoin. The second thing is that gold, from a social consensus standpoint, ask anyone under the age of 35 if they're buying gold or Bitcoin, right? So what you have is you have a capital shift from older, kind of the boomer generation, down to the younger generation, but the younger generation doesn't want to hold gold. And so if you go and you look at the same time that Bitcoin went up over the last, like, let's say 6-7 months, 500%, gold is down pretty materially, right? It's down like 15-20%. And so it's
that doesn't make any sense mathematically.
Well, because people are selling it, right? People are dropping gold and they're buying Bitcoin. Now, again, it is unclear how much of the people that are dropping gold and kind of selling gold are actually going directly to buy Bitcoin. But what you can see is an inverse relationship. As gold has gone down, Bitcoin has gone up. Mm-hmm. And so what I think becomes really, really interesting is, again, a store of value ends up being more of a social consensus than a technology consensus, right? And what I mean by that is Bitcoin is by far 10, 100, maybe 1,000x improvement on gold from a technology standpoint. It's more portable, it's more divisible, right? It's more transparent, verifiable, all that kind of stuff. So from a pure just technology standpoint, it is drastically more superior. But actually what's more important is the social consensus. If everyone was yelling and screaming and saying, go buy gold, right, during this kind of economic chaos, mm-hmm. gold would have went up, right? Mm-hmm. But instead, what does everyone been talking about? What is CNBC talking about all day long, right? What is the institutional investors all talking about? Bitcoin. And so naturally, that's where capital flows. When capital flows to a fixed supply asset, price has to go up to accommodate everybody. And so I think that you're just seeing a generational shift here where analog assets are going to get replaced by digital assets. And what history has shown us is that digital assets are always bigger than their analog predecessors because the internet is just so much bigger than we ever give it credit for. Yeah, so from a macro view, if you just take a relative comparison between Bitcoin and all of these other assets, there are times, just like in any asset or market, where there is higher degrees of correlation, right? So if you think of March of 2020, every asset sold off, everyone wants dollars. It's a liquidity crisis, and so naturally correlations go towards one. But when you look over a long period of time, over many years, Bitcoin's correlation to most of the major asset classes is about 0.15. So it's heavily non-correlated to other assets, stocks, bonds, gold, etc. Now, that doesn't mean that those short-term periods don't lead to correlation, right? So it's important to kind of long-term, short-term comparison. Now, when you look at things like event-driven price events, what you have to look at is, why do people value Bitcoin? Right? It's actually usually economic hedge or chaos hedge, schmuck insurance, whatever you want to call it, or they look at it as some sort of savings technology, or they look at it as speculation. So to your point, when interest rates go down and kind of free money floods the system, people go speculate. And they're speculating in everything from GameStop to Bitcoin to name your financial asset that young people are excited about. That is some portion of the population. But again, 60% haven't sold or moved their Bitcoin in the last 12 months. So those guys aren't speculating. Those are long-term believers, holders, whatever you want to call them. So why are they holding this? There's a very big portion of it that just simply look at it as a savings technology. If you look at most financial assets and you denominate them in gold and not dollars, they're actually down since 1971. So the US stock market is down in gold versus being up in dollars. Why is that? Some will argue, right, that it's simply just the dollar being devalued. And so naturally you get kind of price appreciation of an asset that's denominated in dollars because the dollar is being devalued. Well, against Bitcoin actually is increasing your purchasing power. It's not decreasing like the dollar is. And so those people just want to save in an asset that will continue to appreciate that purchasing power rather than have it decrease in dollars. And then the third bucket, which is actually a really, really interesting bucket, is this schmuck insurance. Right? And so I think that there's this very interesting kind of conversation around, in the United States, if you look at the Federal Reserve's comments or you look at other people, there's this belief that like we're above it, right? It's American exceptionalism, that there's no way that the dollar could ever fail. We'll never lose control from a monetary policy standpoint. Again, I'm a believer of like, it's a very, very low probability, but it's a non-zero probability. And so when you see things like, last year we heard a lot from the Federal Reserve of, we're not worried about inflation. Inflation isn't going to happen. It's a deflationary environment. It can soak it up, all that kind of stuff. Well, over the last 60 days, actually, we started to see some inflation. And now what we're being told is like, oh, it's temporary. And maybe it is, maybe it's not, I don't know. But like, that's a very different story than we were just being told 6-9 months ago. And so when you look around the world, what you realize is there's a lot of countries that went from we're not worried about inflation to inflation is temporary to all of a sudden we can't control the inflation, right? And so like it doesn't take a lot to spiral out of control. If anyone in the world is well equipped to deal with it, the United States is probably that country, right? In terms of we've been really disciplined with monetary policy for a long time. We've got a lot of tools. We got the global reserve currency, all that. But I do think that there is a mispricing of risk in the market where if most people assign 0% value to there being any sort of structural issue, and Bitcoiners assign 1% probability of there being a structural issue that ends up being catastrophic, Bitcoiners are probably closer to the truth than the people who assign zero value, right? Just by the nature of it being a non-zero probability. And so I think that mispricing leads a lot of Bitcoiners to simply look at it as that insurance. And so when you start to extrapolate this out to not this Bitcoin community, but the kind of global macro environment, you now have billionaires doing this. You now have Fortune 500 companies doing this. You now have pension funds doing it. You have sovereign wealth funds doing it. There's a lot of people who are starting to say, wait a second, I got zero exposure and zero exposure is the wrong number. Maybe I should have 25 basis points or maybe I should have 25%, but I got to have some exposure. I can't be on zero. Yeah, so I think it's important to call it right out of the gate. Anyone who says that Warren Buffett is an idiot or Ray Dalio or, name your kind of favorite kind of historic return investor, they're just being intellectually dishonest. So they had an epic run. They're absolutely some of the best investors in the world. Now, with that said, they made most of their money or the decisions they made that made most of their money in a different world, right? It wasn't a digital technology driven world for the most part as we know it today. And so when you look at, a Warren Buffett, for example, he hasn't outperformed the S&P for the last decade. Now, again, that doesn't take anything away from his track record. He's one of the best investors in the world, but the world has either changed or he's the rational person in an irrational world. So you can take your pick as to why this has played out this way, but he hasn't beat the S&P in the last decade. And so if you had taken his approach, you've underperformed. Now, there's plenty of people who say, well, look at somebody on the extreme other end, Masayoshi Son from SoftBank, right? Who I don't think anyone thinks that Masayoshi and Warren Buffett sit down and they're like, we're going to pick the same stocks, we're going to pick the same investment strategy, right? But sure. Masayoshi, everyone thought he was crazy. And now all of a sudden it looks like SoftBank's vision fund's going to do pretty dang well. And so I think when you start to really unpack some of this, you've got to look at, okay, what is the environment that we're in, this technology-enabled kind of digital world? What are the investments? And what I think that we're starting to unpack here is there's a lot of hero worship that happens in the financial markets, right? It's because you did something 10 years ago or 20 years ago, of course you're going to be smart here. Sometimes that is true, but I think that's a very dangerous precedent to kind of fall under. And so what I like to do is just simply look at and say, okay, what are you trying to accomplish?